I think we've now changed the question, really, from how restrictive do we need to be to for how long do we need to be restrictive. That's important. We've also taken the upside bias off. We have included a risk, by the way, a new risk, actually, which is really reflecting, obviously, sort of tragic events in the Middle East and the impact that can have through the Red Sea effects. So I think now the question is, for us, is really for how long do we need to maintain this stance going forwards? As I've said a number of times, we're not making predictions at this point. We're setting up the framework. The things that we think are important to look at really haven't changed, actually. So services inflation, aspects of the labour market, the domestic drivers of inflation, because these global shocks, I think we're now seeing the disinflation side of the global shocks.
But Governor, is there a specific, is it wage growth, is there something specific in the set of numbers that you look at that will give you the impetus to cut?
Well, I think a number of things. I mean, services inflation, it's still at 6.4%, so it's still well above anything that's, I would say, is consistent with us consistently meeting the target, first of all. I think with wage growth, we have seen the official measure come down. It's below where we thought it would be. Open question, really, as to whether that was a sort of bit of an adjustment of some anomalies in that index, or whether that's really is, a move. But it doesn't. It's now in line with the other things we look at. Again, they're above, frankly, levels that are consistent with hitting the target. But I think the important thing there is to say, look, inflation has come down a long way, headline inflation. We think it's going to come down further in the short.
Is that thanks to the Bank of England policy?
Well, I think, two things there. First of all, I think the major driver of that is the disinflation side of the global shocks. What Bank of England policy has done, and I've been saying this some time, I think, is to prevent it becoming domestically embedded, technical second round effects. That's what, and we always said that's what we can do. We can't stop global shocks. Obviously we all wish we could stop wars, but we can't in that sense through monetary policy. So our job is to stop it becoming embedded.
Governor, so Jay Powell yesterday pushed back against expectations for a March rate cut. Markets are pricing in some kind of cut in May or June. Is that fair?
Well, I think markets, I think, are responding to the fact, again, that we have been, we've now set out, in a sense, our framework and said, the question for us is for how long. I think markets are coming up with their own answer to that, which of course they will, and that's quite reasonable. Our forecast, of course, is conditioned on their view, but it's not our only judgment, and we will decide now meeting by meeting.
Governor, why are you so afraid of actually committing to a cut next time? Is it because you're worried about inflation coming back? Are you worried about, the budget that's coming up in March, or are you worried about having to reverse course?
Well, there are really two reasons, actually. One is the evidence. We always want to see the evidence, and the world is, and the second is the world is still a fairly uncertain place. There are still things going on in the world which, I would say, are not the normal course of events in the world and can have quite big effects. And so we want to see how these influence, the evidence that is vital to us.
Like an insurance policy.
It's a question, really, of being too soon to conclude that we're on that sustained path to target. But I hope we'll be there, for long.
Do you think that the UK was in a recession in the last couple of months of 2023?
Well, we don't have a recession in the forecast we've published today. Frankly, it's in the balance, I think, because you can have small margins either way. We don't actually have a recession, and I think I would just emphasise perhaps a point that's even more important. I think there are clear signs with the indicators in the UK that we've seen some pickup in indicators really around the turn of the year and going through January. So, I think that's a positive signal, and that's why it helps to explain why in our projections, our forecast, we've actually got a gradual pickup in growth.
But it's quite difficult to explain to someone who needs to decide whether to remortgage or not, given everything seems to be really hanging on a balance. How would you describe the economy?
Well, I think we are seeing still subdued growth, but we're seeing some signs of a pickup in activity. I think we've actually stronger, and I'm pleased about this, than we expected, household real incomes. Unemployment has not risen as we thought it would. That's good news, obviously, as well. And those things are, now being reflected through into what we see as a gradual pickup in economic activity going forwards.